Okay, hello guys. This is Ray from nextforextrade.com, and just going to do today's market overview. In fact, what we're going to do is going to kick off just with a debrief of yesterday's trade that I took on the USD Swissy. So this here is let's have a look. All right. So what's the best way to look at this? So yeah, firstly we'll have a look over this trade, debrief on this, and then I'll have a look over the market for you guys, see what opportunities there might be. Now this looks a bit messy at the moment, but this is basically the setup for the trade that I took yesterday, showing the entry price in purple, the take profit in green, and the stop loss in red. You can see here from the account that this trade was profitable, and everything that every trade that I discuss here is available on the myforexbook.com account that I have set up. There's a link for that in the description below. This trade did come in profitable. It was a one-to-one trade. You can see the profit on this was just over £100, and these this here I'm going to break down how this played out. So as I said, we've got these three colors here: entry, take profit, and stop loss. Now I'm going to look at it on the hourly because that's probably the best one to use. So these two lines here, this was the entry time and this was the exit time. So you can see when I entered this, what I was looking at on the daily was the fact that we'd had a reversal candle here and the price had moved past the low of it. So this was yesterday's candle that was formed on the daily. So this had given me enough premise to decide to, well, not that alone, the fact that we'd seen the price being in an overbought area, there was finding resistance, there'd been a reversal candle off of that resistance, and on the lower time frames, now I'll go to the hourly, we're starting to see the price move down with lower lows and lower highs. Now when I had entered the trade, we obviously don't have the hindsight that we have now. This was all the information that we'd let's get those two mixed up. So it's just, there we go. So when I entered the trade on this dotted line here, this was all the information I had. Alright, so I can't get it exactly on the candle, but basically this candle was the candle that I'd seen. So I was preempting that there would be further lower lows and lower highs, and I had seen this point here. This was in fact a much bigger move that we're seeing here, was the reversal candle that we saw on the daily. So the stop loss had been placed above that level. It made sense to have a nice secure stop loss outside of that resistance area. Now I had gone for a one-for-one profit on this, and we can see that it played out within a few hours. We'd taken the profit there, and it's just interesting how this did play out, because again, like I said, when I saw this, I was preempting that there'd be lower highs and lower lows, and we can see that did in fact kind of play out as we take the price further along. And this standard deviation channel that I use can be quite useful, because it shows you where the price has those potential reversal points. Even here, more recent, you can see that it's just going within these overbought and oversold areas, and bounces between that and comes back, and it just reverses off of them. So this was a relatively well-timed trade in terms of taking money off the table. It did play out as expected, and it at the moment for me isn't tradable for another entry on this. There are a few reasons on that which I'll go into. I'll go to a cleaner chart of this. So we can see now this is our daily chart again, and at the moment this is just the timing on this entry isn't great for me now. When it was up here and it was just past the low of this reversal candle, that was great. The risk to reward was great because we could have our stop loss above there, and it was clearly overbought. Now the price is coming a bit more towards the mean of the standard deviation channel, which could mean that we'll see some reversals, or it plummets lower towards the lower channel. Now overall I'm still bearish on this. I still think there's a good chance that this is going to be a downward move, but the problem is there's no entry that I can see that offers good value for money, and that's why I think of trading when I'm looking at the higher time frames, at daily, is like so when you're shopping for something, you want good value for money. You don't want to overpay for it. You want a good deal. And for me, a good deal is when the price is, firstly showing a trend, so lower lows and lower highs. So that helps improve the probability of the trade being successful by jumping on the back of that trade. And secondly, looking for the price to be, if it's a downtrend, overbought, which means that there could be some likelihood that the price is going to revert to the mean, come back and move lower and continue with the trend. At the moment, this is just mediocre in terms of value for money. It's obviously better than it being here. I wouldn't want it. So if we'd seen the price at this kind of level here, trying to short this. Okay, so in this move here, going back in time, there, some of the points that I said held true. You're seeing lower lows and lower highs, so this effectively was a downtrend, or it was worth considering. It was worth considering a short on this, or sorry, it was worth being bearish on this. Sorry, my phone's just going off. Okay, so yeah, the fact this is by definition a downtrend doesn't mean that I would have wanted to short this just yet. The problem is it's just too oversold. This extension here is saying that quite soon at this point the price is going to revert to the mean or to the upper channel. So there's just higher risk for me at this point, because stop loss placement isn't going to be great here. The reward to risk, it's just a riskier trade. Here, waiting for the price to come back and find value, and having your stop loss above this, there's this level here above the previous lower high. Blow this up. I'm just going to zoom in a bit as well. Okay, so waiting for the price to move back and find value for your money up here, it means that we've got a clear indication of where we'd be wrong in terms of the price structure. So in a downtrend, like I said, we're looking for the price to be making lower highs. So if the price stops making lower highs, then we're wrong on that movement, and that's a good time to be at the market. If we're trying to take our position down here, even on a 1-to-1, there's no kind of sensible place that we can put our stop loss on a 1-to-1, because for us to be wrong on the price movement, it has to stop making lower highs. And going for a 1-to-1 here, you could be still right in the direction in terms of the price, retracing and then coming back down again, but you'd be out of the market, or you've got to have a crazy, massive stop loss above these lower highs, which means that if you're thinking of your 1-to-1, let's say we'd entered at this point here, and we hadn't seen any of this price information here, right? And this would have been the previous lower high. So a sensible place would be above that previous lower high. It means that you'd need a stop loss of around 250 pips, right, for it to even be a one-to-one reward to risk, which is all the way down here. It just doesn't make sense. Whereas an entry here, from this candle, say for example, right, with a stop loss above this lower high, outside of this kind of the standard deviation, outside of all that messiness, above that resistance, it's about 50-60 pips, give or take. And that's, you know, 1-to-1 reward to risk is in this area here. And it's kind of in the course of what you're anticipating the price to do. So those are some of the things that I'm thinking about when taking a trade. Right, you know, is there decent value for money? How could this play out? How long am I thinking that this is good? And as well, the other thing is time. Ideally, I want to be in a trade for 1 to 2 days, you know, 3 tops. And if you're taking a position like that, you know, when you're looking for the price to move lower, it's going to take days, weeks, possibly months to happen. The timing on a trade, like I just discussed, is it's more likely to hit your profit within a day to a few days. So those are some of the things to consider in taking positions. But yeah, this short did pan out. At the moment, not looking for any other shorts on this. Firstly, because the price isn't really ideal at the moment. What I'd need to see, and this would be next week now, because we're on Friday. What I'd need to see is the price come back, find some value, see some kind of a reversal off of the standard deviation or previous resistance in the same way that we did before. Just looking at the way this price action is developing, I think it could see some further move lower before moving and retracing higher. Just looking at what these lower time frames are saying, but there's no definitive kind of trade that I would take in this instance. And as well is the weekend, and as I mentioned in some of yesterday's videos, I don't like holding positions over the weekend because of the fact that you've got open positions between the close on Friday and the open on Monday or Sunday, whichever country you live in. And that leaves you open to risk, additional risk, because in the time between the market closing and opening, it could gap. And sure, if you've got a position open, that could go in your favor, and it could gap over your take profit, and you could make more than you anticipated. Or, and this is the thing you should really be thinking about, it could gap over your stop loss, and you could lose a lot more than you anticipated. So you need to think about that. So I tend to avoid trades on Fridays. If I do, it'll most likely be in the earlier morning, as opposed to, you know, opening a trade at 6 p.m. on a Friday is not a good idea in my opinion. But it depends on what type of strategy you're trading. This approach, that wouldn't be part of the methodology. What else can we have a look at? Okay, let's just have a cycle through some of the charts and see what opportunities there could be for next week. So in this instance, this could be something to look on for next week, especially if today this is a reversal candle for this level here. You can see it's interacting with that resistance that we were seeing previously. Not quite ready yet though. So I mean, this is another thing. The way that I'm looking at this here is it helps with time management, because you're not sat just looking at stuff like wet paint. You can plan around what's going to happen. If I know that, right, I need this to be a reversal candle, and that needs to be by the end of day today, Friday, it means, okay, if you do create a watch list, you can say, right, this is something I need to look at on Monday, and there's no point looking at really until then. So I mean, I'm bearish on this, but this I want to see this as a reversal candle. So this is still forming. So Monday, and all I'm doing here as well is looking at the daily chart firstly before considering any of the other ones. This, and as well, so let's say I'm bearish on something. What I want to see is signs of a reversal, so some sort of reversal candle off of a level, and for effectively there to be signs that it's moving down, because I don't want to see, even though the price is interacting with the standard deviation, I don't want it still to be moving up. Right? It's like catching a falling knife. I want to see that something is moving in the direction that I'm after. That may make more sense with some other examples we do, but this one here, this needs to be a reversal candle for me. So that's again Monday. This is kind of a good example of what I was talking about. So this, the fact that this has come through and it's kind of, yeah, fair enough, it's outside of the standard deviation channel. It's a bearish candle. Now, overall, in terms of this move, I'd probably be bearish, in the fact that we've seen lower lows and lower highs. Might take that move into consideration to be bullish, but the bigger move that I'm seeing is this one. But I wouldn't want to be short on this anyway, because of the fact this last candle was bullish. I want to see this start to come down. So let's say that there was a reversal candle, but then I wouldn't just enter based on that reversal candle. The price should move past the low of that reversal candle. So that's another thing to take into consideration. When you do see some a reversal candle, wait for it to move past the low if you're shorting, or past the high of the candle if you're going long. It just gives that extra confirmation. Yeah, you might give away some of the profit. You need to have a wider stop, but you've got confirmation from the market that the price is moving in the direction that you want to. If you just aggressively enter, having seen a reversal candle without waiting for it to move past the extreme, so past the low if you're shorting, or past the high if you're going long, then you could just get stopped out on that, because you haven't had any confirmation. You can still get stopped out anyway, but what I'm saying is just wait for that confirmation, wait for the price to dictate how you take the trade. This here is very choppy. No clear trend to that. This is looking good. This is meeting some of the rules, higher highs, higher lows. It's just this candle isn't really what I would personally look for. It's I mean, it's tradable, but like I said, it's Friday and I don't want to take any position. Yeah. Yeah, I mean, I could viably see a trade in this. What I'd be thinking is looking at the hourly, and I'm not going to, but I'm just taking you through some of the theory. So if this was like a midweek, early week, midweek, I'd be considering this, and what I'd be looking for. Or let's backtrack. So firstly, you've seen up signs of bullishness on the daily. It's within the standard deviation channel. It's come down. It's found support off of this level as well. That support's echoed as well. I'm sure if I put this to this level that yesterday's candle interacted with. Oh, come on, MetaTrader. There we go. You can see that there's previous kind of levels here where it's interacted with previous support as well. So that's good reason to say that the price could have trouble moving lower than this level. I mean, even if you put a standard trend line on there, you can see that there's a line of support as well. I do use the standard deviation channel just because it's quicker, but there's, you know, clear trend line as well, where the price has interacted and bounced off 1, 2, 3. You know, some people do trend lines differently, matching up the bottom. Some just do a rough line of best fit, if you like. I'm just more line of best fit, because Forex markets like that, you never have an exact price anyway. It's decentralized market, so from broker to broker the prices could be different anyway. So it's more of a art rather than a science with trend lines. But okay, so in what we're seeing on a daily, there's enough reason to consider being long. Let's put my channel back around this. 4 hourly echoes that, just more granular, and this this move, let's have a look. Yeah, the timing on this so the reason I'm kind of umming and ahhing here is that this isn't, I mean, it's good in the fact that we've seen it come down and interact in the same way that this move here, it's basically this move here, it's the same thing. So I'm now looking at what is this retrace here on the daily is kind of a trend, if you like, or lower lows and lower highs here, you could effectively call that. But it's just this last candle here is basically a bearish sign, and I'm looking for longs on this. And the concern is this candle is kind of on a resistance area where it's found previous support there. It will go back as well. And also it's at the mean of this linear regression channel. So really the price, this is kind of a deciding type of candle, because if it moves past the low of this, then I'd be thinking that there could be some, you know, further move at least to these levels here. But if it goes past it, then it kind of goes into the narrative that this price could move higher in the near term. Now this what I'm talking about here also comes into play on these lower time frames here. So my concern is that this is kind of in limbo at the moment. It could go either way. What would be definitive to consider longs on this is if it were to break past the high of this. We can see on the hourly that that is more significant area of resistance that it needs to get through, and this plays into the narrative again that if we see this break through this level, then it's going to be kind of a trend in the price action on the lower time frames, because it will most likely break through. This is the hourly, by the way, this is 15-minute. Break through, pull back, and start, you know, cycling throughs with higher highs and higher lows. So if this were not a Friday, I'd be possibly considering this if this were to break this level, and I'd be looking for those cycles to appear on the lower time frame, so on 5 or 15-minute. But yeah, it's just a theory on that one rather than a definitive trade. That's not something that I would take on today. Let's go on to the next one. Let's just see how much time we're doing. Okay, we'll just do see as many more we can get in for 5 minutes or so. This possibly long on that, but not great. And this is the thing, when you're looking through stuff, just look for the best stuff. And you know, I rarely have more than one position open at the same time. Just you know, go for 1-2. This is my opinion. Just go for 1 or 2% on a trade. Have one trade open at a time. Don't look to have multiple trades open, because unless you've got a chance of playing yourself in that. If you're long in one currency or short in the other, or even in the same direction on the different currencies, there's the problem of currency correlation. You might have currencies that move in the same direction, so they're positively correlated, or move in opposite directions, negatively correlated. And if you've got two positions open, those positions, unless you know what that correlation is, there are sites that you can go to find out how correlated currencies are, but unless you know what that currency correlation is, you could be either doubling your risk if you've got two positions open and they're similarly sized, or you could just be cancelling one out while one goes into profit, the other goes into loss, and you know you've messed yourself over. So that's why I think starting out, even more advanced, just look for the best currency, look for the best setup, take that, and just see that through. And you can avoid making those type of mistakes where where you're just losing money because you didn't understand the correlation, or then you've got to split your attention between two positions if you manage them that way. So just keep things simple. In this one, no, this is I'm bearish, but it's not anywhere where we could consider an entry. No. Every time that I'm cycling through these, I'm looking at the daily, and there it's not enough value for money. It's too near the mean. No definitive trend in that. Possibly if I were a fader and go counter trend, I'd consider a position on this, but no, that's a story for another day. No, too oversold. It's too expensive to try and sell that. Too sideways. Too oversold. Not enough value for money in that. It's just at the average. Just at the average. No. Too oversold. No. 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 It's crude. DJI, no. Okay. Okay, yeah, that's it for today, really. And yeah, sometimes the best decision, well, a lot of the time in trading, best decision is to not trade. If you're not seeing the setups, don't force the trade. In fact, I think just the lesson learned, I do try and take my own advice. I think you can see that in the first video that I done, I was, first or second video, took a loss there, and I've got nothing against taking a loss. I'm happy to take a loss as long as I've traded it well. But I think I was a bit too eager just to show you guys, how a setup would work and take a position, and it showed in hindsight, looking back on that, it was a mediocre setup. Should have been looking for better quality, and it came out against me. So c'est la vie, that happened, but the good thing is the risk is small enough that it can always trade another day. And yeah, that's just something to bear in mind. Don't force the trades. If there's nothing there, there's nothing there. Just wait. Okay, that's it for today. If you've found anything that I've said useful or got any questions, just let me know. I am trying to grow things here at the moment for this channel, so leave me like, subscribe to the site, subscribe to the channel. If you are interested in one-to-one coaching, that is something I offer now. So go to the site www.nextforextrade.com. Link will be below as well, and you can get one-to-one coaching from me. All right, I will see you guys in the next video. Take care. Bye.